Hello everyone, this is your swing trading stock market outlook for the week of March 11th. Each week I go through the same process, just assessing the overall market health, and that helps me determine how aggressively I want to be deploying capital on individual stock trades. If you're ever wondering where this article is, if you go to the Trade That Swing website under stocks and go to stock market analysis and trades, this article is updated each week and you'll see it there. In terms of actual stocks I am watching, usually focusing on these lists mentioned at the top, the best swing trading stocks list for March. That's a list of high momentum stocks. There is a strategy listed at the top of that article that I like to use. And then we also have the current stocks watch list, which is focused on things that are very close to setting up. So that includes chart patterns, earnings plays, tater strategy trades, which can also be used on this list, the tater strategy. Highly visual indicator-based trading method. So let's look at how the indices are doing. I like to look at a few different indices just to get an overall sense of how the market's doing. So we have the NASDAQ 100, more tech stocks. It's not fully tech stocks, but just a little bit different segment than, say, the S&P 500, which is just the largest companies in the U.S. The NYSE Composite covers a very wide array of industries of different sizes from different sectors, and the Russell 2000 is smaller companies. We also have the Canadian index on here, and we also have a few other things we're going to look at. So the NASDAQ 100 in a nice uptrend here, higher highs, higher lows. Getting a little bit choppier recently, but still in an overall uptrend. The NYSE Composite, probably one of the broadest measures that we look at because it covers just so many different types of stocks in a very strong uptrend. The S&P 500, strong uptrend. The Russell 2000 had this big pullback. It has moved again to new highs, and we have been moving up for quite a while. The Canadian index, also moving higher, was choppy through the first part of the year, but has moved aggressively to the upside. So that is an overall uptrend as well. Let's quickly look at Bitcoin. This stock, Bitcoin, peaked out here in 2021. We had this big, what I call a severe bear market when it's more than 70% decline, because 70% declines are important because they tend to lead to these big rallies after it's happened. And we had this big rounded bottom pattern. And we have run up to the new high. This is a weekly chart, so we're looking at several years of data here. Based on the study of Bitcoin, let's see if I can pull it up here. I have an article, or let's go this way. So this article, Statistics on How Bitcoin Moves. Is it listed anywhere? Yeah, so you can find this under Investing, How Bitcoin Moves, Bitcoin Cycles, and it looks at every Bitcoin rally, all the percentages of pullbacks, how far it tends to run. And if we go to the bottom here, we'll see a chart of how it acts after regaining all-time highs after a severe bear market. So we can see after a severe bear market, when it gets back up, this is a weekly chart again, you can see it tends to chop around there. It chopped around for several months here. Big whipsaws, and we're in that situation again. So maybe we get the big whipsaws. We've already seen one. It hit the all-time high, quickly pulled back 15%, and then we're right back at all-time high, or close to all-time highs again. So just something to be aware of when trading Bitcoin in this environment. And gold has also broken out. This is actually showing only part of the pattern. There is a huge decline, and this was a rally back. So that we had, similar to what we see in Bitcoin, gold saw a huge drop from 2013 into this 2020 peak, and then we basically had a big cup and handle, and this is our handle portion. So it's breaking out of the handle and out of this bigger pattern. So indicates a long-term uptrend in gold potentially underway. The Bitcoin miners, gold miners, based on GDX ETF, you can see is fairly sluggish compared to gold. So until this starts, really moving out of all this chop, I'm not too interested in trading the gold miners because they're still just kind of chopping and more so to the downside over the last few years. So not really confirming this move in gold. So we'll see if they end up following through. If you're trading gold, this is looking pretty good. For the gold miners at the moment, still not looking so hot from my perspective. Let's look at the market health indicators. This is an S&P 500 chart, and these indicators basically look under the hood of basically the health of the market. That's why I call them the market health indicators. So this first indicator is how many stocks are above their 50-day moving average. The reddish orange one is S&P 500 stocks. The turquoise bluish one is all US stocks. And while we were moving up, it did decline a little bit, but we didn't really breach that 50% level. It's generally going to be much easier to make money on the long side when more than 50% of stocks are above the 50-day moving average, because then even if you're almost buying a random stock, you're more likely to do well. Whereas if it starts getting down to 40% and you're buying stocks, you have to be much more selective. It's going to be harder to make money. More stocks are starting to drop. But we're still holding up there. 76% of S&P 500 stocks are above their 50-day moving average, and 56% of all U.S. stocks are above their 50-day moving average. So we're kind of hugging that line, but still overall in good shape. Volume not really important to me at this moment. ROC, this is the daily percentage movement of the S&P 500. And what we're basically looking for is uptrends are characterized by lower volatility. So you can see a big difference between, this is the end of the bear market, 2022, and you can see these big drops, like multiple, more than 2% drops in a day. So this would signify like a 2.5% drop, 2.5% drop, 3% drop. These numbers here dropping below this little red line, you can see it's at -2. So this is just signaling days that are down more than 2% on the S&P 500. They are a warning sign, and we have not had any of those in a very long time, signaling a bull market. So we went from volatile and choppy to more sedate, moving up, and this is what we want to see in a bull market. So that's still positive, confirming the uptrend. If we start to see big daily drops, that is indicating a lot of selling pressure, and we'd want to step aside. Has not happened yet. That's not a prediction that it won't happen, it's just saying it hasn't happened yet. At some point it will. It's a little cut off because I just wanted to zoom in on the right side of the chart here, and we have a nice strong move up. This is the advanced decline line. Advancing stocks minus declining stocks is a cumulative number for all NYSE stocks. And it's trending up nicely along with the S&P 500. Warning sign would be if the S&P 500 is continuing to go up and this starts moving down. We do not have that yet. Again, it's not a prediction that the S&P 500 won't drop. It just says, at least at the moment, things are looking okay. Upside volume versus total volume. This just looks for really big upside movement in terms of volume, lots of volume coming into stocks moving up, or lots of volume coming into stocks moving down if the number is very low. And you can see it's pretty much in the middle of the range. We're only looking for really high values or really low values, and all of these are in the middle of the range. So nothing important there. So overall, I think I cut it off a little bit here, but this is a happy face, this is a happy face, this is a happy face, and this is a nothing face because it's a neutral at the moment. The ultimate indicator we want to look at is how are setups working? Are we seeing lots of trading opportunities? Lots of trading opportunities out there that I've been seeing. The things I've been trading have been working very well. The end of the week we saw a bit of selling, so gave, profits might have been reduced a little bit, but overall still what I've been looking at has been doing very well. So that's encouraging. That tells me I want to keep taking trades until that stops working, and then we back off. Sectors on the move changed up a little bit this week. It had pretty much been technology, consumer cyclicals, financials in prior weeks. You can always see the prior analysis down here and just a little table. It just gives a quick summary of all the top sectors and how everything was doing. And switched up a little bit. We see utilities. I don't typically trade utility stocks because they don't move a whole lot. Same with consumer defensive. I like trading things that move quite a bit, so I pretty much exclude those sectors anyway. But in terms of the other sectors outside of that that are performing well, basic materials makes sense. That's related to gold. Gold moving up last week. Basic materials, real estate, financials, industrials, all kind of hanging out over the top of the last week. These are also the ones that tend to be clustered near the top over the last month. We have basic materials, real estate, financials, industrials, technology just kind of near the lower end. But if you look at these percentages, it's not that far behind, so it's still a pretty good sector to be in. And over the last 3 months, technology, financial, healthcare also up there, industrials. So these are the sectors I would say, just kind of from all three time frames, looking fairly good. So what am I doing right now? Well, I have lots of capital deployed. We have been in a bull market for a long time, and so just rotating in and out of stocks as trades come, get stopped out, hit profit targets, and I'm continuing to do that. If we start to see some deterioration and these market health indicators start to weaken, then I'll back off. But for the moment, at least still considering taking long trades when I see good setups that I like. Of course, there's always the option to day trade or passively invest. If you're interested in those, you can check out these links here. So that is your stock market outlook for the week of March 11th. Have a great week out there.